Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today we're going to talk about Turnaround Tuesday. All right, what happened in futures markets today? We saw canola down $7.80 to 6.4010. That's over the January. Minneapolis wheat down 1.25 cents at 5.57. Kansas wheat and Chicago wheat actually posted some gains, 2.5 cents in Kansas at 5.49 and 5.25 cents in Chicago at 5.62 and three quarter. Soybeans were down 12.75 cents today over the January at 11.27 and a half. Corn was down 2 cents at 4.31 and a half. Bean oil was down 3/10 of a cent at 49.89. Canadian dollar down another 20 points to under 71 cents now to 70.95. Live cattle and feeder cattle both took a bit of a turnaround as well, diving back down to 227.78 in the live, and feeder cattle at 323.73, having lost $7.75 a hundredweight. All right, we're going to start off with canola charts today. There was a lack, I guess, to put it bluntly, a lack of any significant movement on trade talks with China between Carney and President Yi. Kind of weighed on values despite recent indications that those relations could be thawing. Canada's latest federal budget will be released later in the day, and market participants will be watching for any relevant news on trade or supports for farmers. While the canola market was due for a correction from a chart standpoint, nearby support in the form of that 20-day moving average, as well as the 50-day actually, held to the downside, and values were well off their session lows by mid-session here. Something to watch out for here is we do have the 20-day moving average that's going to cross the 50-day moving average. That is a positive technical signal. But we do have this resistance up here near 660 that we need to punch through in order to get some more legs in this market. As you can see, the 200-day moving average is very close to that too. So if we could get a push, above those levels into that 660, 665 area, the 100-day moving average is also up near 670. So there's lots of resistance up there, but there's also quite a bit of support down here. So, directional bias is a little bit challenging. We've seen some high volatile days here in the last little bit, but overall, I think we are getting out of the harvest lows. Just to reiterate here is, and I found this on Twitter. So if this is a completely made up image, I apologize here. But the core of it is that the two governments are talking. This is a release from the Pakistani government. The ministers welcome the successful conclusion of the first round of negotiations. Pakistan and Canada agreed to facilitate the export of Canadian canola to Pakistan, recognizing the significant potential of Pakistan's expanding market for this Canadian economy. Yesterday, we talked about how much that could be. Generally, Pakistan imports between or around 850,000 a year, with the higher end being in the millions, 1.3 or so million. So it's a good news story for canola, which did rally the market yesterday. It gave some of that back today in this turnaround Tuesday. What we also saw was a bit of a turnaround in the soybean oil market. This market has been struggling as of late. As you can see, there's very sideways trading pattern happening here. And it did pop below previous lows just the day before yesterday, rallied back, and now is kind of giving some of that back. That 200-day moving average is looking like decent support at this point in time, as is that previous low. Although the trading below that low is a bit of a concern. Canary in the coal mine, if you will. Talking just about energy and sustainable energy here. There was kind of a story overnight or from yesterday that did lay out some concerns here. So ADM shares tumbled 8% as biofuel policy uncertainty clouds outlook. Now, I think a lot of this has to do with ethanol, but I think that it's all kind of linked together. So ADM shares tumbled 8.5% in pre-market trading after the results. The ADM posted adjusted earnings of 92 cents per share for the quarter ending September 30th, which actually exceeded the analyst consensus of 85 cents. So this tumble was done on a positive miss on on earnings. The problem came in, however, is that ADM cut its full year 2025 earnings guidance to three and a quarter to three and a half per share from its previous forecast of approximately $4, which is well below the analyst expectations of 380 or 379 to be more exact. Looking at a chart here, though, we did see some rebound, some significant rebound in the ADM stock. The and going kind of going back to the 2026 guidance, the downward revision primarily reflects lower crush margins resulting from muted demand due to the deferral of U.S. biofuel policy and challenges with international trade flows. Investors reacted negatively to the guidance cut, sending shares sharply lower, although it looks like they did rally back into the end of the day, kind of making it for a very volatile day from where it started to where it ended. But still some risks here, I think, that the market is looking at into the biofuel sector. All right, let's move on to soybeans. We also saw some turnaround in soybeans. Now, I'm not going to toot my own horn too much, but yesterday we did talk about these markets being extremely oversold. This, or overbought, sorry. This is a graphic that we showed in yesterday's video that showed all of these momentum indicators, MACD, stochastics, and what's the other one here? My eyesight is, relative strength index, all being in the overbought category and look like they were ready to be sold off. We did see exactly that today, and we brought values back down into the 1120 range here. So, I guess we could say that was expected to some degree. We may just kind of, as a friend of mine named David Ryman, who taught me a lot about this industry, he often would say the toilet bowl needs to refill or needs to flush after being refilled. That could be what's happening here. Also, we're looking at corn here today. We saw a bit of a turnaround from the last couple of days in corn. We're struggling to get up past this 200-day moving average, although it did break above this July high not too long ago. And actually, that was a double high. That was July and September, but it struggled to move any higher than that. It's kind of rocketing back and forth between 430 and 435. So very tight range here over the last week or so. If we can get up above that 200-day moving average, that would be a positive sign. If that does happen, I think there is room here to move up, kind of an extension into the, call it 50% or maybe even 61.8% extension level. Actually, that coincides quite nicely with the 450 high that was achieved in June as well. So we're at kind of a precipice here on corn where if we punch higher towards the above the 200-day moving average, we could see 450 corn again on the nearby. But failing that, we do have some support down here at 4.25 at this point in time. All right, wheat markets were actually one of the positives today. We saw wheat continue to rally here. Wheat ended the day here, the nearby CBOT wheat at 550. This is a good close, I think, and we moved over the last 2 days. We moved above the 100-day moving average, meaning that we're likely to come and test that 567 area on the or the 200-day moving average. Very similar pattern here in HRW. We broke above that 100. That previous high may act as support now. We've got a trend line forming here. The 200-day moving average looks like the next level of resistance. So still looks positive in the HRW pit as well. Now, China has been sniffing around for wheat. They may have purchased some as well from the U.S., so that's why we're seeing strength in the winter classes. But of course, the spring wheat has been lagging. We did see a close today at 557. It has been as high as 570 in the last week or so. So this market is flagging a little bit and just kind of more anemic. Perhaps it needs a little bit of a pick-me-up, if you know what I mean. All right, moving on to Canada's Liberal government here. Canada is set to deliver a budget today. By the time this had been released or this recording was made, it had not been released, but François-Philippe Champagne is the finance minister in charge of the file. But of course, Mark Carney, who's a former central banker, is uniquely interested in financial markets and has personally promised to present a pro-growth budget that will usher Canada into, quote, a new era and, quote, define our next century. Another quote, we will have the resources to transform our economy from one of reliance to resilience. He was quoted as saying in Asia, this is expected to be done through a combination of funneling public dollars into certain sectors and regulatory relief on major nation building projects. Carney said he wants to catalyze unprecedented investment in Canada and build the country's reputation as an energy superpower, given its huge reserves of oil, natural gas, and expertise in renewables. Champagne said Monday this budget will sketch out the Carney government's vision for the future, suggesting it will be more important than in years past, given the multitude of challenges Canada is facing. So overall, if they do deliver on that, that is a little bit good for Western Canada, which is not common for Liberal governments to do. But and maybe it's a little bit of pandering to Western Canada to see if he can muster up some support. But overall, if that comes to pass, maybe not necessarily for the agriculture industry, but maybe for Western Canada, that looks like a positive. It was interesting to see what happened in the Canadian dollar today. You know, you could say that the market was expecting the budget to be negative for the Canadian dollar, but really what it is that the US dollar index continues to rally. It's gaining some strength now. We're testing highs from back in July on the US dollar index. We're testing the 200-day moving average. If it does move above that, we could see some legs. There is some money coming into the US dollar as a flight to safety right now, as we're seeing stock markets kind of peel off a little bit and some other riskier assets kind of decline as well. So the US dollar may be back in vogue for as a risk trade or a risk off trade. And that's why we may be seeing some strength in US dollar and corresponding weakness in the Canadian dollar. All right, we did see a bit of a turnaround as well in the cattle markets. Cattle markets fell over 2% in both of the cattle markets today. Here's December live cattle, which went back down to 227 and three quarter roughly, and feeder cattle, which gapped actually significantly back during the when President Trump was announcing some of the changes to cattle imports and things like that. We thought that maybe this market was moving higher. It was higher at one point today to try to fade this gap and maybe even test some of this resistance that we're seeing now in the 20-day and the 50-day. But that wasn't in the cards today. We saw the sell-off, and we're back into what feels like a heavy cattle market. All right, if you're not subscribed to this YouTube channel, please do so now. We really appreciate it. And subscribe to our premium content at canadianagmarkets.com/subscribe and get all of our analysis, which is focused on Western Canadian agriculture. Thank you for joining us. We will see you again tomorrow. Have a great day.